What's up, everybody? Welcome back to my channel, Earn It, Save It, Invest It. And I'm sure you have heard the big news that Donald Trump is looking to fire Jerome Powell, or has thought about it, and then is taking it back, and then is saying, well, he might, and then maybe not. So I'm going to go over exactly what would happen if Donald Trump does fire Jerome Powell. And I'm talking more about the stock market and the financial markets, exactly what will happen. I'll go over it just really quickly because I know it's kind of in the news, and I think it's going to be in the news actually for quite a while over the next, I'd say 6 months. We're going to hear a lot, more over the next 3 months. We're going to hear a lot of Jerome Powell and Trump going at it. This was already kind of foreseen. We kind of already saw the Fed was going to hold their rates where they were, and we knew that we should be lowering rates, and Donald Trump definitely wanted to lower rates, and we knew there was going to be a face-off at some point. So we're kind of at that point right now. There's reports that he's saying he will fire Jerome Powell, then he's saying, well, he won't, but he will try to if he's looking for fraud over they're doing some renovation to the federal building. So it's a mess. So I'm just going to quickly go over exactly what would happen if Donald Trump does in fact try to fire Powell and put someone in his place. So if you do like this content, like this video, please give a like and subscribe. I really appreciate it. That's all I ask for. Let's break it down. So in a bunch of the news articles, or at least on the front pages of the websites, you're going to see something about Trump and Powell. And right here you can see what happens if Trump fires Fed Chair Powell. This would be a mess, analysts warn. And we're going to go over exactly what they're saying, and then I also asked ChatGPT exactly what would happen, and I'll give you those answers as well. It says a new research note gaming out possible scenarios if President Donald Trump fires Federal Reserve Chairman Jerome Powell, warns that it would be significantly negative for markets. Wolf Research speculates that the Supreme Court could ultimately decide whether Trump has the power to fire Powell for cause, which probably not. Trump said he was highly unlikely to fire Powell shortly after a senior White House official said the Fed chair was likely to be fired soon. This is one thing you have to understand about Trump is he's going to make the markets volatile. He's going to say one thing and do another. Do one thing, say another. It's going to be a mess like that. That's what it is. But it does bring more buying opportunities because there's all of a sudden going to be a dip just because he tweeted something. That same researcher, Altman, pointed out there'd be a stark difference between the economic trajectories of countries that have truly independent central banks, such as the United States, and the nations that have politicized their central banks, controlled by example, their heads of state. So essentially he's saying, you do not want the president and the government, the head of state, to have a control of your central bank. You want those to be separate. You need them to be separate. For the latter, he cited Turkey and Argentina as two examples. Both countries have had double-digit inflation rates in recent years. Again, if you have someone who's just going to follow orders of the president, that's just not going to be good, right? Especially if it's a central bank. They're controlling the money rate of everybody in the country. So I asked ChatGPT, why is it important to have a separation of government and the central bank of a country? It says a separation between a country's government and its central bank is crucial for maintaining a stable, credible, and healthy economy. Here's why. Number one, it prevents political abuse of monetary policy. If governments directly controlled central banks, they might print excessive money to fund deficits or election promises, which we printed a bunch of money for COVID. That had nothing to do with, the political side. That was just a bad mistake, but we did all that anyway. Keep interest rates artificially low to boost short-term economic growth before elections. This does lead to high inflation, currency devaluation, and economic instability. So let's say, some elections are coming up. Let's lower the rates. Let's make everything look good for a minute. Try to get, some elections won, and then let everyone, feel the pain, which is not a nice thing, right? Number two, it doesn't ensure long-term economic stability to have the separation. Central banks focus on price stability, controlling inflation, and supporting sustainable growth, objectives that require long-term thinking, often at odds with short-term political agendas. Politics is very short term. They're very thinking about the now, and the right here, right, and they're not even thinking about sometimes 6 months, 12 months, a year, 2 years. They're not thinking about that. They think about what they need right now. Sometimes they're even thinking about the past of what we should have had, what we could have fixed, what we could have changed, and then that's what we need for the future. But they're not thinking even long term sometimes. And of course, again, when you talk about politics, elections, right? So of course, they're kind of thinking short term naturally because they only have their term to think about it. It does build credibility and investor confidence. An independent central bank signals to markets that decisions are data-driven and not politically motivated. That's huge. Obviously, I think we all know politics is a mess. So if you try to add the central bank into the mess, not good. The country is committed to fighting inflation and preserving currency value. That builds trust, attracts foreign investment, and keeps borrowing costs low. If you don't know, many countries do invest into us, and that's what the Treasury, they're able to invest into us. And if we had the central bank being politicized, it would push away other countries investing into us as well. It avoids hyperinflation and debt crisis. History shows that when governments control central banks, they often print money to pay off debts. Examples: Zimbabwe and Venezuela. This leads to hyperinflation, economic collapse, and widespread poverty. It's kind of what it explained in that first article, where it's just not good. It will lead to instability, right? Having the government control what the money does, it's just not good, right? You need those two different minds. It supports the checks and balances. Separation adds a layer of institutional accountability. It limits the concentration of economic power in the hands of political leaders and protects the economy from irresponsible policymaking. Again, politics is crazy. It's very short term, and they just and it's such an at odds. It feels like politics is like you're either on one side or the other. Central banking should be just everybody. We're all in it. We're all in this together. We're all in it. So, in summary, a central bank's independence helps protect a nation's economy from short-term political pressures, maintains price stability, and ensures long-term economic health and credibility. So in short, we do not want Trump to fire Powell and put someone in Powell's place that Trump feels like that he wants. We just want someone that is going to be out for America. Like, they want America to do well, not Trump to do well, not whoever the Democratic next candidate. We don't need any of that. I did also ask ChatGPT what would happen if Trump fired Jerome Powell and put in a candidate of his choice in the place of Powell. First, it said there will be legal challenges. Obviously, you can't really just fire the Fed chair. You have to have actual cause. So now they're trying to say something about the renovation of the building. If there was fraud, they're going to try it. And when you hear that actually possibly signals that they might want to try, because they're looking into something to try to shoot at Powell to, fire. That would be kind of crazy if they really did. There is also reports of people being Republicans even hey, they know what would happen in the markets, and they're saying don't do it. And it'd be setting a precedent. No sitting Fed chair has been removed by a president before. Doing so could trigger a constitutional and institutional confrontation over independence of the Fed. That wouldn't be good, obviously. Federal Reserve independence, market confidence impact. The Fed's independence is key to its credibility. Firing Powell and installing a loyalist perceived as politically motivated could rattle markets, increase inflation expectations, or weaken confidence in the U.S. monetary policy. It's all that same stuff, basically, right? People would be scared. It would bring up inflation, and people would not want to invest in the country that we're being politically motivated on our central bank. Congressional backlash. Bipartisan members of Congress may view such a move as a threat to the Fed independence and could respond with legislation or hearings. Global implications. The global financial system depends on the Fed's credibility, and we are the United States. We do matter a lot. Any sign of politicization could affect the U.S. dollar, treasury markets, and international relations. And the economic effects, short-term boost or volatility, the markets may initially rise on rate cuts, but the long-term risks include inflation, currency devaluation, or capital flight, and then inflation management, again, just trying to manage inflation. So, again, in short, we do not want Trump to fire Powell. We don't want that. But does he have a point? Yes. This is the true inflation. This is like the real true inflation report and the rate that we're at. And we're at a 2.00, right? We're at 2%. But when you look at the Fed funds rate, we're at a 4.33. We are 2.3% over. That's 230% basis points over. That is just way over what they want them to be about the same. And so a lot of people are calling on, Powell or the Fed, whatever, to just lower the rates. And they keep saying, well, we're going to see. We'll see what happens. And for a long time, they've been saying they're data dependent. They're looking at the past, right? What has happened, and then they look at that data to see what they're going to do moving forward. Now they're saying, well, we're going to wait for the future to come along. And now they're not even looking at the past. Now they're not even looking at, okay, guys, inflation has come down. Interest rates need to come down. What's going on? Trump does have a point. There's also a lot of other people who are preaching the same thing. I'm preaching the same thing. There's a lot of people saying we need to lower the interest rates, but the Fed is just not doing it. But that also is not a cause to fire Powell and then put someone politically motivated in there. You just don't want that. I hope you like this video. Please give it a like and subscribe if you do. I try to make it a little bit quicker than my other ones. Again, if you are wondering if this is a good thing for the markets, it really is not a good thing. But one thing I do like about it is it's holding off our rally a little bit. It's not letting our rally just boom off, because eventually, obviously, it'll come crashing a little harder. So I think if we have a little bit of stability, like, okay, we took off a little bit once we hit all-time highs. Now, we're like, okay, we're questioning something, then we go on another big run a little bit. We'll see. But odds are we're going to be getting our first cuts in September, which is, 2 months from now? So we'll see. I think the markets are going to kind of run for the next 2 to 3 months maybe, and then we might get some kind of weird news. I don't know what it is, but I'll go over that in another video. I did talk about what I expect in the markets in a previous video. You can go check that out. Again, give a like and subscribe if you like it, and don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.